Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Don't forget to subscribe, like, and share these videos. Yesterday's market action was very impressive as we saw the leadership taken back by the large cap tech names, with the NASDAQ up 2.5%, S&P and other indices up 0.8 or thereabouts. That leadership change that I've been talking about over the last several weeks definitely took a step back. It's still ahead of the action. I'll go through that scenario and the possibilities of it continuing as we go forward. But it's important for the leadership to change, for the markets to continue to go higher. If the NASDAQ continues to lead like it did today, we're going to ultimately hit a tipping point, which is going to cause other issues. Well, my expectations was that we were going to see a consolidation. The NASDAQ made a new high. The S&P actually closed into a 5-week high, but there's still some numbers above the markets on the S&P that I'll discuss in the technical section that are still critical for its further advancement as far as the trend goes. As I mentioned last week, we seem to be locked between the COVID case increase and the vaccine optimism. The algorithms were driving the markets, as many of the stories, roughly about 60% of them around the financial markets, had some element of a coronavirus vaccine, and the Oxford story that was out there in a big way, along with a couple others. But this drove the narrative. The machines, once they get a hold of this kind of stuff, they don't give up, and you could just see that grind right into the close. On Tuesday, we're going to start to dig deeper into the releases of the earnings. And Tuesday will be focused on the regional banks. We also have some airlines with UAL coming out. And also we've got TD coming out and some of the brokerage firms. I expect these numbers are going to come out fairly good. Maybe UAL may have some issues, but those numbers are expected to be bad. But as we go through these earnings, so far we're continuing to see better than expected, and that may be the case throughout the week. In the video that I did yesterday talking about this being a critical week, it is, but my expectations were minimum downside and more of a sideways pattern. We can still set up a choppy pattern from here. The fact that NASDAQ closed at a new high, that it can't reverse back into the range. We still haven't printed an all-time new high from a price level. We did finish on a closing high today. Now, we're seeing some follow-through in the markets overnight, but it does look like they want to continue toward the upper end of the ranges that I'll discuss in the weekly and monthly market grids on the NASDAQ. Let's go ahead and take a look at the charts and see what they're telling us for Tuesday. As we begin tonight with the S&P futures, you can see that the momentum is starting to surge. Overnight, we're seeing a continued rally as we're trading up toward the S2 numbers, 3267.25 level, intraday high 3267. So we have reached the R2 number. So far today, the low has been 41. We did not quite make it to the S1 level, which is 3234. So the low has been 3241 overnight. But the PPMs are beginning to accelerate again. Yesterday's rally was able to trigger the markets into a test of that 3280 level that I've been discussing. You'll notice on the grid for the futures, R3 is 3278 and extreme is 3289. We go over to the cash market. There's a slight expansion of the volatility, but it continues to be very narrow, with only a 32 handle range on the upside being projected as an extreme. It's likely we're going to see that R2 on the cash level as well, 3267, and then R3, 3275 to 3282, which will be the test of that key pivot number that I've been discussing over the past several weeks. Now, as we look at the cash, we can go back and we can see that it continues to be long on a trade that went on back on May 4th at 28.42 basis to cash, and it continues to hold this position as the market climbs up this narrow range that's been unfolding over the past several weeks. In yesterday's video, I talked about the potential for the markets to go into a consolidation range, and the news on the vaccine yesterday just blew that up, and the algorithms took over, and now we're pressing the markets even further. When the early London crowd came in tonight, they pushed the markets sharply higher, up about 0.5%. The configuration on the cash, we're not seeing an extreme amount of upward acceleration, and with the narrowing range, there's still some vulnerability to this market. I've discussed this for, I think, the last 2 weeks, that the 3280 level is the key level that we have to get above. Once we get above that level, then we're on our way to much higher prices. As I put on the Fibonacci projections, there's a very tight projection right now. If we get above that 3280 level, then the next level will be 3306. As the market continues to unfold in its uptrend, there's still a fair amount of vulnerability with the lack of momentum that's in the markets at this time. ppm 1, 2, and 3 are 0.23, 0.21, and 0.24. They're basically at the minimum trend level, and this suggests that the key levels below the market will continue to hold, which is at the 3192 level as major support right now. I don't see that being reached, as the range for the downside today extreme is 3220. We're likely to experience a S2 R2 range today, and we could see a further acceleration if there's any more enthusiasm or news around the vaccine that could come out. That's actually what we're trading right now. Going over to the NASDAQ, there were some new projections that were coming out of the pattern that we're seeing. That new high target is 11,688, 12,196. So this market is starting to project much higher prices. There's a more robust trend level that we see on the NASDAQ, 0.48 on ppm 1, 0.51 on ppm 2, and ppm 3 is 0.41. So we're seeing that upward acceleration. We're seeing some new Fibonacci projections come out of this pattern. As we review the weekly chart, we're trading toward the top end of the range of the weekly. Currently, 11,114 is R3. We've come very close to that, 11,056. And the extreme for this week, 11,266. There's a sharp acceleration. I discussed this yesterday, that there was a huge acceleration in the ppm2. You'll see the spike here as it's moved up to 1.38. I also mentioned in the opening comments that it is still possible for this market to fall back into the range. Even if we print some of these higher numbers, there's going to be a fair amount of resistance, especially with all the news that we have coming out. Let's look at the leadership, and this is on a very short-term basis. The only chart that's active right now is the futures chart here, and this is what I was discussing. We're quite a bit off the low, so we're setting up a potential right shoulder for leadership. So in spite of the huge spike we saw up 2.5% on the NASDAQ yesterday, the retracement from a spread standpoint is fairly healthy, and it looks like we're trying to stabilize here at the moment. Looking at across the grid, going left to right, is Dow Jones, S&P, mid cap, small cap, and then the futures, the NASDAQ futures versus the E-minis. But you can see this, we definitely retraced substantially, but this leadership change is still in play, and we're likely to see this consolidation down at this level over the next couple of days. So in spite of the sharp surge we're seeing overnight and the patterns that we're seeing, this pattern is still intact and still starting to unfold. As I mentioned in the opening comments, it's important that this leadership does change for the markets to continue higher. The NASDAQ could lead things forward, but we could get to a tipping point where the NASDAQ gets so overdone that it reverses and causes havoc across the board in the S&P and the other indexes. that would be a more volatile situation to occur. The final market I'm going to cover tonight is the crude oil. We're looking at the weekly crude, and this market continues also to be narrow, but we're now trading above the 21 period moving average. Now it's still negative where it's at right here. ppm2 has actually penetrated its first and second derivatives. This is the first time this has occurred in this pattern, suggesting that it's likely to continue to move toward the convergence of the 40-week moving average, which is currently at 56.82. My expectations for crude, I've discussed over the past several weeks, is to move toward the 45 to the 48 levels. Then we'll see some consolidation. What this is telling us is that the perception will be that the economy is going to continue to come online and that there's going to be an increased demand in crude oil. This will complete the video for tonight. Thanks for watching. Don't forget we have the WaveTech training at 4:30 Eastern Time tomorrow on Tuesday.